people have begun to lose their hopes. People who have no hopes are easy to control. And whoever has the control has the power.
Hey everybody, today I just want to talk about the stock market and stock market sentiment, and I wanted to make this video because I wanted to share some of my views moving forward with the stock market and just things in life in general. I'm not a financial advisor, this is just my personal opinion, so please do your own research. So what I wanted to first get into was the news. Every time we go on to our social media platforms, or if we use Google, or if we basically just browse the web or go on forums for discussion, things like Reddit or Yahoo Finance, or just the news, nothing's good. Everything is always bad. Look at this. I just type in news in Google and these are the first things that come up: lootings, mass murders, geopolitical warfare, and more. So all this news is really bad. But let's just look at some of the news real quick so we can get a better idea, because my whole point is that the news only shows the bad things, but it never shows the good things. When we hear good things, we kind of just pass by it, but when you hear bad things, it grabs our attention. It puts us on alert. The stock market is a very manipulative thing, okay? So it's the whole point of the stock market is, and the way it's structured, isn't to invoke feelings of positivity and growth and expansion. It's to take money from the very wealthy. It's for the very wealthy to take money away from the poor. And so when they say time in the market beats timing the market, there's a lot of truth to that. When the markets are low, when the stocks aren't doing well, richer and wealthier people can maintain their standard of living while acquiring a lot of stocks for very cheap. But us poorer folks, or middle class, or even some of the wealthy, if we want to maintain our standard of living and invest at the same time, it's hard. We oftentimes have to be pressured into selling our stocks or assets. We have to worry about bills and food. Our standard of living will go down if we do heavily invest in the stock market, especially during economic downturns. So when we look at the news, most of it's really bad. But is it really that bad? When it comes to mass murders and shootings, there are tons of mass murders and shootings in the United States. But this has only been going down when we compare it to the past 100 years. Okay, so yes, it's bad, but it's like, why are they trying to invoke feelings of negativity? Just like the Never-Ending Story, it talks about like how those who have feelings of hopelessness and despair and negativity are the easiest to control, the easiest to influence, which is why radical groups are often those who are seeking hope and have despair. They're easily to control. So we must try to understand things the best we can and try to be more understand the nuances and take things at a pragmatic approach. Or with the Israel and Hamas war, there was the Ukraine and Russia war that's been going on for the past 10 years or so, and we kind of just forgot about that. The Israel and Hamas thing, like, this has been going on for decades, centuries. Do I think this one's going to be different? Maybe not, right? This has been going on for a long time. So moving forward, let's even look at news of China, because none of it seems probably good. China's former premier dies. China's premier dies. Okay, well, he's the former premier, so it doesn't really matter. Chinese fighter pilot harasses US B-52. Mid-East Ukraine conflicts rise. Okay, so none of these are good. But if you actually look into the news regarding China, here, let's take a look. China, Gavin Newsom. So the governor of California, which is the 5th largest economy in the world, or the 4th, has met up with Xi Jinping and in China to discuss economic and resolutions towards climate changes, and let's see, and to better relationships economically and politically and socially with China. And then we have Wang Yi, Xi Jinping, and Biden, and the Biden administration are all meeting up soon. And Wang Yi is currently in China trying to pursue diplomatic relations and strengthen political ties. Yet, for some reason, when you Google things regarding these things, it doesn't really talk about it too much. Biden meets with top Chinese diplomat as rivals seek to manage tensions. And so this has actually been going on for a while. There's a lot of groundwork being made that shows that China and the US are going to start working again. If we want to reach 2% inflation, we need China. There's just no ifs and buts about it. If we want to print more money in the United States to fund our debt-driven economy, we need more money. But look, a lot of the news that we see is bad. There's nothing good. And there's no nuances. There's no history behind it either to help shape give us a better understanding of things. It's all just negativity for the most part. So the economy, with the way it's structured, generally goes to highs and lows. So I guess when you have low interest rates and the economy there's a lot of supply, and there's a lot of supply and a lot of demand, you're going to have economic prosperity, and then you're going to have accumulation cycles, right? So when you're up here, you want to start selling. When you're down here, you want to start acquiring. Here, think about it like this. Whether you're a retail investor or a business yourself, if you have money on the side, the best time to accumulate assets and stocks and equities, things like that, is when they're cheaply priced. When companies are failing and businesses are failing, but you're a company that has cash on hand, you're going to buy warehouses, you're going to make contracts, you're going to make deals with companies because they need more cash than ever. Partnerships are going to be more important than ever. And so, for example, if I owned a store that sold 1,000 razors and I bought each one for $1 here, 2, 3, 4, and I had to sell the razors for a higher price to match that dollar that I'm raising each time, there's going to be substantially less demand for these razors from the manufacturers, which means maybe I can get each razor for 50 cents, or maybe I can acquire the entire razor manufacturer for, I don't know, $300 million, and then I can capitalize on this and then sell my razor company up here, and then I could sell my razors at higher prices as the demand goes up to meet the demand. So this is a good thing for your companies. You should be watching. Are these companies expanding? Are they raising capital? Can they refinance their debts? Are they able to acquire capital in a time where it's hard to obtain money? Are they acquiring assets that maybe they couldn't? Are they making partnerships that they couldn't before? So when we look at the psychology of a market cycle, I mean, where are we right now? It may seem like we're here, but we're not. Because when you look at things like the S&P 500, the Russell, the NASDAQ, these larger indices, they don't give you a real demonstration of the health of the economy. So let's look here. When you look at the Magnificent Seven, so these Magnificent Seven stocks are some of the largest cap stocks in the S&P 500 and NASDAQ. So because of this, these companies are giving a morphed perception of the real health of the economy. If you were to use like a stock analyzer or a stock filter, you can actually see like, oh, okay, so out of the 2,000 plus companies listed on the New York Stock Exchange, majority of them are seeing like 52-week lows. Majority of them are not seeing 52-week highs. So low and small, mid cap stocks are just not performing that well. And then there's a few exceptions, like again, like your Teslas, Nvidias, Microsoft, Meta, Apple, Amazon, and Alphabet. Like these companies are doing really well, which helps prop up the S&P 500. And we also need to understand that a lot of our retirement funds for our country are heavily tied with these indexes. So the performance of these indexes are very important, for the overall health of the economy. Like, even if the stock market cannot justify these prices, it doesn't really matter if like small and mid caps are not doing so well, because as long as we keep the indices up, as long as we pump more money into it, then people can still obtain money for their retirement and for their retirement portfolios, right? So if these indices fail, the S&P 500, and we see all-time lows in these things, 52-week lows, it's going to be really hard for people to retire. There's probably going to be more civil and social unrest. So it's very crucial that you keep these indexes propped up. Like, even if, and it's perfectly fine to have these things pull back. There's no problem with that. So let's just look at these three. So yeah, actually, when you look at this, it looks like we're at all-time highs, right? But while we are at all-time highs for the S&P 500, that doesn't mean that majority of the companies within that feel that way. It's these large caps that are leading the way. So when you look at this right here, if we had the S&P 500 around these levels, it would be really hard for retirement funds to be able to reach into their pockets and give money to these people seeking for retirement. These different indices give you a better idea of how the markets are doing, but look, even during even the Nasdaq is not performing as best as it could. It's doing pretty good, but it's not good as it could be, or where it's been. So this is a bubble. This is a real bubble right here. Is this a bubble? Kind of, but nowhere near the extremities of this. So even the Russell has pulled back tremendously. But this might give us a better idea of how American companies are doing. Now let's take a look at the Hang Seng, because that's another one that's really big. Oop. Here, let's just look at Crane shares, because that's easier to use. KWeb. So when we look at the KWeb, yeah, it definitely gives us a more realistic understanding of things, because generally the Crane shares and KWeb follows growth stocks. So if your growth stocks aren't doing well, KWeb's probably not going to be doing well either. If KWeb's doing well, then your growth stocks are probably going to be doing well, because the more riskier your asset is or stock, they're going to generally trade together. So growth stocks are a little bit more riskier. Small cap, mid caps are a little bit more riskier as well. So in aggregate, the Crane shares and KWeb, things like that, Chinese stocks, are probably going to trade in correlation with growth stocks. So yeah, we are reaching like early 2000 levels. Like, this is during like the turbulent time of turbulence. So is the Chinese economy really that bad? Are all these webs really that bad? Like, are Chinese companies not a real thing? No, they're real things. Look at the Hang Seng. Oh, this is the bank. But even the banking stocks, right? Just one, if we look at it, is not doing so well. I wish I could find something else, but let's see. Li Auto is a Chinese company. So this Chinese company is doing pretty well compared to its IPO, because it's profitable. NIO, on the other hand, is not a profitable company, but they are acquiring assets for cheap. They do have $7 billion cash on hand, I believe. So they are acquiring assets. They are making partnerships and things like that. But then if we look at things like Palantir, it's the same story, right? So these companies aren't really shown to be profitable, but they do have a growth story, which reflects their market cap and their investor sentiment. But it's just needs to be proven over time. But why during this time when the company was priced below $5, people were saying, don't buy, it's scary. But look, you would be up over 100% easily. So if we go into the stock screeners, we can definitely see that like none of these companies have really been able to maintain their 52-week highs, and that while they are performing really well, 1, 3, 5, that it doesn't really give us it doesn't show real strength of the overall market. Like these large caps are definitely carrying the market, but it doesn't show like the underlying issue. So it's like if you see a person and he looks physically healthy, but inside their kidneys are dead, and that's currently the stock market. So this also reflects with the fear and greed index, right? So we are currently in extreme fear. We are not currently in extreme greed. If we were in extreme greed, then you would probably see that in all stocks. So that's probably why your stock market portfolio is either down or not performing well. So overall, I just wanted to give my few opinions on things, because it's like we might get a morphed reality of the situation. We might think that things are worse than what they're actually not. Yes, there are bad things happening, but we live in the United States where things are amazing, and there's a lot of developing economies that really don't have to worry about things. Developed economies that don't have to worry about third world problems. And yes, there are things that will negatively impact our quality of life, but does that mean that all the stocks in the stock market should be reaching 52-week lows? Perhaps a lot of them do, because of a lot of them relied on like cheap money, low interest rates, and a growing economy. But a lot of the companies that we probably hold, if we've done our own due diligence, they have a lot of cash on hand. They can probably weather an economic storm. They're doing relatively well given the economic health. And so a lot of these companies may be undervalued depending on what metrics you use to measure a stock's value. And it's the stock market is always going to go up. It has continued to go up time and time again. So here, when we had problems, or even during the Great Depression, which this does not show, but anytime we've had issues, the stock market has always recovered. And this is because our economies are just ever growing. And I guess my main point is that we should always be looking for opportunities anytime there's a downturn or there's just blood in the streets, because things may not seem as bad as they really are. And a lot of the things and emotions that we feel are artificially and intentionally made for us to feel and to invoke certain types of negative feelings, because perhaps, those who do control us, and those who try to control us, and those who do have all the wealth during this time, they pumped up the stock market, they pumped up cryptos and other things like that. They told us to buy speculative things, and then they crashed the markets without us knowing. They pulled the rug. And so during this time, in the March crash, they told us not to buy here, and then the stock market recovered. They told us not to buy here, and look, the stock market somewhat recovered. And they kept telling us to buy here and buy here. So I don't think things are as bad as they are. We need to use logic, we need to use history to better understand how things really will be moving forward. Do I think that the Fed can maintain these high interest rates? First of all, I don't think that's the only way to really control market sentiment. Like, I don't think that's the interest rates will necessarily be the only thing that we should be looking at. There's a lot of things like, I don't know, the Maslow's hierarchy of needs, or how are people's well-being generally are. How are they doing? How is sentiment? How much money do people have to be putting on the markets? And how important is it that we have the stock market performing well for, civil and social well-being? Without these things, would we have a social and civil unrest? So this is all data as a number, but we need to understand how that really translates into the real people's lives. even with a war with China, is that really possible? More than likely not, right? Because it's either at that point you're going to have World War III, and that's just not going to happen because there's, you know, mutually assured destruction, or we're going to all have the Great Depression 3.0 or 2.0, and that's just not happening. So because at that point you're better off worrying more about canned food and if whether or not you're going to be drafted into the war and if you're going to be okay, versus how much stocks you have and what you know, things like that. So overall, I guess we just need to use logic and then determine what is a good deal to us during times of volatility. So with that being said, hope you all have a great day and really think about things. I'm not a financial advisor. Do your own research and have hope, because don't let them take that away from you, because when they do, that's not good.
Never give up, and good luck will find you.